The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the August edition of Digging into the BI. This is where members from the Maryland, D.C., and Virginia area of Better Investing get together and look at the latest issue of Better Investing magazine. And we'll look at the stock to study and the undervalued feature. That's Booking Holdings and Skyworks, respectively. And then we also have two others that came to us from other presenters on Visa and Perion Network. So those are the four stocks we're going to look at tonight. And let's go to our next slide. And this is our standard housekeeping thing. This is a standard disclaimer that we're doing this presentation for educational purposes. None of us are investment professionals. We're all volunteers, and if we're showing you a particular product or stuff outside of Better Investing, it's not an endorsement of those websites, the products, or those services. We will record this, and it will go up on our YouTube channel, hopefully later on tonight or sometime tomorrow, whenever everything gets through. But that is it. Let's go to our next slide. And again, I see many of the people in this audience are regulars here, so you're probably Better Investing members. But since this is going up on YouTube and some people may not know who we are, this is betterinvesting.org. If you have the handouts, those hyperlinks will tell you a little bit about Better Investing, as well as what we do on long-term fundamental investing. Or if you look at the top of every one of these pages, there's the link to Better Investing at betterinvesting.org. Let's go to our next slide. And we also, here's the YouTube channel. So it's at Digging Into BI. We've inched over 100 subscribers. We're seeing if we can now get up to 125. We're moving a little bit at a time. For those of you that are there, I've seen we're starting to see a little bit of movement, but go ahead and like these videos and share them and subscribe to the channel. That helps with the algorithm so that we're able to reach more people. We're doing this for free, and that's sort of what we ask in return. If you can do that, we'd greatly appreciate it. And all of our webinars are organized in what are called chapters, which means you can just advance to whatever stock you want to listen to, so you don't have to listen to all four of them if you just want to listen in on one. Let's go to our next slide. And again, we haven't had any trouble like this in a while, but if you are having trouble hearing it, most of it is usually if you're on your computer and you don't have computer audio hooked there. And again, this is where you can get the handouts if you're listening to us live. Over on the right-hand side, you'll see the 5 handouts of 4 completed SSGs, as well as a slide deck for tonight. Next slide. And again, you can be able to take a look at this if you want to be able to see this a little bit bigger. You can adjust the size on it there. I was trying to get the closed captions on here, but I guess it works on my computer, but we may have an earlier version of it on the one that we're doing it, so therefore we're not seeing the closed captions tonight. We're still working out the bugs, but we'll get there. Next slide. And so why are we doing this? Well, we're all Better Investing members, and we like to sort of show you the resources that you get either as an existing member, or if you're just sort of trying this out for size, there's a free 90-day trial that you can get. And we show stuff how to be able to complete stock studies using the stock selection guide, which is a Better Investing form. Periodically, we'll talk about the PERT report that goes with it, but we're just basically trying to show you the best practices for someone who wants to be a long-term fundamental investor. It's done as a joint program of the 2 Mid-Atlantic chapters, the Maryland and DC regional. We're promoting our model clubs, and we also want to promote those Visit a Club programs. So if you're looking for members to join your club, there's ways to do it, and we'll have some slides to talk about it. Let's go to our next slide. And so in just over an hour, we're going to look at the 2 featured stocks, the stock to study and undervalued feature, and then others wherever they came from. These, I think they came from the ticker heat map and from a presentation from the DC regional chapter's annual meeting with Doug Gerlach. So let's go to our next slide. And again, if you need to be able to find this stuff, you can see it under Home About Us. The news releases. You don't have to be a BI member to take a look at it. So these were announced all the way back in May. but you can take a look at them, and they already have stuff all the way up to October is on the website, so you can go take a look at them to see what they're doing. If you want to time it so that your club is looking at them in the same month that they're in the webinar, they're already up there. In terms of the announcement, the stories and the background material are not, but you do have enough there to get started. Next slide. And again, to make sure that you find out what's going on, make sure to sign up for the BI weekly newsletters. You can sign up for your local chapter news where I have that arrow pointing to over on the right-hand side. But before you do that, make sure to sign up for the BI weekly newsletter. It's that one that's highlighted in yellow. And then from there, you can hit your Save Changes, and we'll show you what you get the BI weekly newsletter. Next slide. So this is for members, and it shows you what's coming up in the upcoming week in terms of either national education. They had one on Thursday when this came on out that said that there was a presentation tonight at 8:30, but when I looked at the BI site, it looks like it's not going to go on. But there is one a couple days later here on the 10th on the 7 deadly biases of stock investors. And they also usually have some good stock ideas and other things that are going on and some first cuts. So if you've signed up for it and you're not getting it, check your spam filter. You may find it there. Next slide. And you can connect with us on Facebook. I noticed that the Maryland chapter is getting a little bit more robust and putting things out. Over on the lower left-hand side is the latest news from the Maryland chapter. We also have it up in the DC chapter. We try to coordinate and make sure that if we're putting something on the DC chapter that's of Maryland nature, we still try to do it just to be able to help out. Again, it's a great way to connect with people that aren't necessarily BI members. Let's go to our next slide. And Jonathan, why don't you tell us about what you're doing with the meetup that the Maryland chapter has?
Sure. Meetup is another way to connect with individuals who have similar interests and passion. The Meetup is actually a web-based platform so that the members can join groups and events inside or even outside of your community. A Better Investing Home Office actually has registered with the Meetup Pro service, and I believe they're inviting all the chapters to join to help us grow the Better Investing community. So you can see our member list has been growing. It's actually up to 25 now, so we're getting new members that want to join and participate and find out more about Better Investing almost weekly. Every other day, we seem to get a new addition. So I think it's a great way to market our services and a lot of the things that we do. And we will continue to add additional events going forward too. Next slide. This is the Maryland chapter's stock pickers contest. It's coming to a close. It ends August 26th, and our front runner continues to be Bright Ideas with a phenomenal 29.4% return. And so it's, again, that's coming to a close within the next couple of weeks or so. Okay, next slide.
Okay, and so this is my club. This is the Montgomery County Model Investment Club. And there's a picture of us with our summer social, and we did that in combination with Pinnacle Group Investments. So it's a mix of all of us there, but we meet on the third Wednesday of the month, and it's free, it's online. There's the link to go to it. It's also up at the DC chapter site. Our education will be analyzing banks, and we haven't figured out our stock study, but we're sort of voting right now between Addis, Cavco, and Arista Network. But if you want any more information, there's the email address to reach us. Let's go to our next slide. Janet, tell us about your club.
Okay, my club is Virginia Commonwealth Investors Club. We meet in Woodbridge. Well, we meet but via Zoom right now, but we were based in Woodbridge, Virginia. We have 13 members. We meet the first Thursday of the month, so we just met. And our education is, we're going through all the reports in my iClub at each meeting for a while. And the stock to study will either be another small company or a mid-sized company, because our club is top heavy in the large category right now. And so we're trying to get it more diversified and more in balance. And I am the point of contact.
Very good. Thank you. Let's go to our next club to feature. And Cheryl, tell us about the club that you and Janet are in.
Yeah, whoops. Went up a slide there. Okay, we are the Model Investment Club in Northern Virginia, or otherwise known as McNova. We have 12 partners, and we started this club in 2008, which is about when they started doing model and investment clubs. We meet on the second Tuesday of the month, so our next meeting is tomorrow night from 7 to 9 p.m. It's online, and there is the link for that, and you can also dial in using your phone. For education, we're going to do Value Line Beyond the One-Page PDF. And for our stock study, we're going to look at Toro Company, which the ticker is TTC. And there is the point of contact email address. And visitors are free to come. And please, bring someone with you. And we love to have an audience. And this is the Promote Visit a Club. You can either look at that for the Maryland chapter or the DC regional chapter. Both of them are posted up there on their respective sites. And it talks to clubs that are looking for members and where they are located and when they meet. And sometimes a lot of them now are becoming online. And so you can kind of tune to the one that you want to. And also we have programs for both chapters where directors will come out and speak at your clubs on topics that would be of interest to your members. And if you contact us for that, you'll see later on we have some more contact information. You can sign up for that, and we'll be glad to send a director out your way, or do it all virtually if you're meeting online.
Okay.
Okay, back to you, Ken.
And sort of tying in with that, there's a new program that they've been rolling out to some of the volunteers. We're commonly called directors. But even if you're not a director and you're a member of Better Investing, under the investment clubs, there's a new Club Connect. And basically what it is a way to be able to have people connect with each other that are BI members, or if you're even on the free 90-day one. It's going to officially start next month, but it's a more proactive way to sort of connect with clubs. So if you're looking to either join a club, or if you want to be able to, you're looking for partners for your existing club, this is a way to do it, just like the Visit a Club program and the Connect with the Club that we had, or Visit a Club program. A little bit more proactive, but again, it's still a decision between you and that club to decide whether you join it or not. BI has no role in that, but it's a way to sort of adjust to the 21st century and get things going. So take a look at that. Next slide. And so we are digging into the BI. So here's the August issue. You can get it both on the app or in the e-magazine before it hits your mailbox. So this one came out a couple weeks or so ago online. I always get it there before I get my hard copy. I've asked a few times whether people read it on the app or on the e-magazine, and universally most of us are like, I wait for the paper to come on in. But it's a great way to see stuff earlier if you want to take a look at it. So let's go to our next slide. And one of the things that you can get earlier with this is that is where that red arrow is that for any of the featured stocks, that means the stock to study or the undervalued feature, there is additional documentation for each of those stocks that are there under the Learning Center and BI Magazine. If you want to sign up for the BI Magazine for the mobile devices, like I showed you on the previous slide, what you have to do is it's a different sign up. It's not the same user and password, but if you click on that, it will take you through that to see all those things. But I have it on mine so I can at least see what's going on. Next slide. And so we want to sort of look at one article from there that's worthwhile. And this one was a due diligence column. Thomas Saylor did it on just sort of analyzing banks. And, I won't read you all those things if you have the handouts here. And if you remember, you can take a look at. But one of the links that caught me was he cited 15 ways to perform a banking stock analysis that I found quite interesting. Again, there are some differences with this, as he says in there. It's not the same as if you were buying the snack food business, but you can learn and you can be quite successful with it. So if you're looking to invest in banks, this may be a good thing to take a look at. Next slide. And so here are the investor fairs that are coming on up. Janet mentioned a little bit about Georgia's having one in person in 12 days to take a look at it. So go ahead and take a look at some of the upcoming events. A lot of them are online, so you can, no matter anywhere across the country, take a look and see if it fits your schedule. Anyway, next slide. And so we've done enough of the housekeeping, so now it's time to be able to look at our first two stocks that we'll do in core, and that's going to be Booking Holdings and then followed by Visa. So I'm going to turn it over to Kent, and you can be able to tell us all about Booking.
All righty. Well, good evening, everyone. My name is Kent Young, and I am a member of the Alabama Emerald Coast chapter, hailing in from Madison, Alabama. And I add my welcome to Kevin and our other club and chapter representatives. Tonight, I'm going to be discussing a quick analysis of Booking Holdings Incorporated, following its inclusion in the Better Investing magazine as a stock to study for this month. And as I provide a lot of data for you that folks may be inclined to peruse, we're going to be touching on a little bit of it this evening, but we've got a lot to cover, so let's get going. Next slide, please. After my first look at Booking Holdings, my first thought was, well, isn't that a pretty typical company? Until 2019, Booking was growing at a rate of 11% approximately, and then it tanked in 2020. Followed by a nice recovery. And I had some thought about why this happened, but first I had some questions about who or what is this company and what does this company do, because I had not really heard of it. Next slide, please. Some quick background. Booking Holdings is an amalgamation of several, really quite a lot of companies acquired over its history since 1997. In 1997, it was founded as Priceline, which you might have heard of, and it's headquartered in Norwalk, Connecticut. In 2018, Booking changed its name from Priceline.com to Booking Holdings when the managers realized that Booking.com had a much better name recognition in most of the rest of the world. And so there's Booking.com, Priceline.com, Agoda.com, which is primarily in Asia, Rentalcars.com, and OpenTable and Kayak, two of which you may or may not have heard of. Next slide, please. Booking's primary source of revenue is booking and payment services, and you may have used one of their services for airline tickets, lodging accommodations, or restaurant tables. But how does Booking make money with these services? Let's take a look at the next slide. In 2022, consumers booked 896 million room nights of accommodation, 62 million rental car days, and 23 million airplane tickets using websites owned by Booking Holdings. That's how they make money. In 2017, there was a good amount of revenues that was derived from commissions. 93% of their revenues were from commissions, and 6.6% was coming from advertising, which is what Kayak does. Next slide, please. So these are the primary sources of revenue. Agency revenues is when Booking is acting as a travel agency. Maybe some of you are old enough like me to remember what a travel agent was. And so Booking is actually acting as a travel agent, grabbing commissions after the travel has been completed from the travel service providers, i.e. the hotels, the car rental agencies, the airlines. In merchant revenues, that which is their second largest revenue source, they come from transactions where Booking helps move money from travelers when they're booking to the provider for the service, kind of like Kayak does. And of course, Booking extracts a small fee for each of those transactions. And if you've ever purchased an airline ticket or stayed in a hotel room or rented a vehicle through Kayak, you've probably seen advertising on their website. If you've eaten at a restaurant with a reservation by Open Table, then you've contributed to Booking Holdings revenue and their other revenue segment. Next slide, please. So Netherlands-based Booking.com produces the largest share of this company's revenue. In 2017, 89% of its gross profit was made outside the US. In 2020, overseas revenues accounted for about 87% of the company's total 2022 revenues. I haven't yet found an allocation for their profits geographically. Next slide, please. Historically, revenue growth over the past 9 years, after we eliminated the anomalous data caused by COVID, was 11.1%. And you can see how close to a straight line that growth looks. Given the current management team has been active since 2012, thereabouts, we could assume that consistency might continue. Next slide, please. And if you look at the peers, their revenue growth lines are very similar, nearly identical patterns actually, except for Airbnb, which just started showing up in the SEC reports a few years back. Thus, we can have a really good feeling that Booking Holdings is on par with its peers, and it appears to be really the biggest peer of all of the identified competition. And speaking of competition, I have read that there are other bigger potential competitors expected to come into the arena because Booking.com is making so much money, and that would be competitors such as Google, Amazon, Facebook or Meta, and Alibaba coming in from China. Next slide, please. So here's some data for those of you who have some very left brain needs to consider. Next slide, please. Historically, the earnings per share growth over the past 9 years after eliminating, again, the anomalous data caused by COVID was 11.1%. And note this is identical to the revenue growth for the past 9 years. Now, again, we can see how close to a straight line that growth looks, but it was very interesting that earnings per share growth was a negative 6.4% when COVID effects were included in the analysis. And that negative growth rate indicated to me that that company's success is really closely tied to the success of the world economy. Next slide, please. On the other hand, compared to the peers I selected, Booking Holdings maintained a positive earnings per share in 2020 and recovered much more quickly as the world economies began opening. Thus, I take my hat off and applaud the managers of this company for doing some really good work during some very trying times. Next slide, please. And more data for your consideration. You can take a look and note all the negative numbers in there from other companies. Next slide. So how good are the managers? COVID had a really big impact, and you can see that here on this slide, and the manager's ability to generate income. And it's really unsurprising that in the travel industry, everything shut down in 2020. And in 2021 and 2022, the travel industry's recovery began, as did Booking Holdings. But perhaps in 2023, Booking's profit margin might return to that 30% floor that you'll see if you look further years back. But what about their peers? Next slide, please. Over the rest of the industry, COVID had a pretty ugly effect on profit margins. Next slide, please. And here's more data for you to consider. Next slide. Booking Holdings did a really good job with return on equity, keeping it above zero during COVID. And we're very happy about that. Next slide, please. Note that while not shown here, Airbnb's ROE spectacularly tanked in 2020 with a return on equity of a negative 994%. That's minus 994. The rest of the travel industry didn't fare much better. Next slide, please.
5 minutes, Kent.
Thank you. More data. Next slide, please. So debt exposure is where I really got concerned about Booking Holdings. And I noted the company's debt is more than 80% of their equity. That means that bondholders are receiving far more of the earnings than do we as shareholders. Booking also holds more debt and has the highest debt to equity ratio of any of its peers and the travel agency or travel industry in general. And I suspect that that debt's being used for acquisitions, but it was unclear in their annual reports where that debt was being utilized. Next slide, please. If we look over the company's financial history, as you can see, there's a wide disparity in growth rates over the last 10 years, from a minus 17% to more than 600%. And somewhere in that growth range is where we want to choose revenues and earnings per share for our estimate. So let's see what other analysts think. Next slide, please. Market analysts are providing a forward look and estimate growth rates between 10.9% and 37.8% over the next 5 years. So these narrow our potential estimates down substantially. Next slide. My BI analysis narrowed the range even further. So for revenues, we could estimate 16.7% at the high end, and about 10% at the low end. For earnings per share, I can estimate anywhere from 18% to 30%. But because I'm a little old school, I preferred to use the revenues-based revenues to estimate those earnings. So let's go on to the next slide. And here you'll see that revenue-based earnings estimate. Using our estimates in the analysis to this point, I utilized the preferred procedure to calculate two EPS growth rates, one for a minimum revenue growth rate and one for a maximum revenue growth rate. So the minimum revenue growth rate, 10.9%, maximum growth rate, 16.7. So next slide, please. Oh, that's just a glossary for your revenue-based earnings. Next slide. Now, based on the analysis, we can do a sanity check to compare my expected sales to the Value Line's expected sales. And after comparing the estimates in 5 years to Value Line's, I found the 10.9 sales growth rate really matches Value Line pretty closely. Next slide, please. As far as earnings per share, is another sanity check here, compared my earnings per share to Value Line's, and I found the 14.6% sales growth rate yield an earnings per share growth in 5 years close to the Value Line's 5-year out expected growth rate. So I kind of chose that growth rate. And these choices imply that in the future, we need to follow earnings per share and sales growth rate to ensure the company's generating enough sales to generate an earnings per share of 14.6%. All right, next slide, please. So to set the high price and calculate those boundaries on the booking stock price, we eliminated outliers in the PE ratios before multiplying them by the EPS. And so we got an estimated high price of $5,442 per share. Next slide, please. Likewise, for the low price, we eliminate those outliers, and that way we get a low price of $1,876.20 per share. Next slide, please. As you can see, the Booking Holdings has quite a price spread, which is large, regardless that the market moves around in a lot, quite in a day. Okay. In fact, today's closing pushed the price a little closer to the top. So next slide, please. Sorry. So these are the summary of the SSG. You can see where buy price for 3-to-1 is 27.05, but the buy range that I've got there, if you buy it below 27.67, you'll still have a pretty good deal. Next slide, please. So I suggest Booking Holdings has become a little overheated in the current environment. In fact, today, the last time I looked at it, it was up about 5%. So I would suggest looking at other options while keeping Booking on your watch list, because I think it's a reasonably managed company, if not a well-managed company, and do definitely take a look at how they're using the debt. Anyway, next slide, please.
Thank you very much, Kent. And now we'll switch over to Jonathan and tell us about Visa and how you found it.
Okay, thanks, Kevin. Visa is quite ubiquitous within the better investing literature and the website. So you can find it just about everywhere. It seems it's on the ticker heat map. It's first cut. It's usually one of the top 10 companies that are considered for many of the investment clubs. So Visa has been around for quite some time within better investing. Next slide. So Visa is within the financial services sector. It's not a financial institution per se, but it does not issue credit cards or extend credit. It really acts as a middleman between financial institutions and merchants. It is the largest payment processor in the world. It's processed over $14 trillion in total volume last year. Next slide. Visa actually processed 700 million transactions daily, and they're generating revenues from each one of these transactions. They have over 4 billion cards, Visa cards in circulation currently. If you look at the diagram to the right, imagine you own a restaurant and one of your customers pays for their dinner, which is $100 with their credit card. It's a Visa credit card. So there is going to be deductions and fees as a result of the customer using that card. Some of the fees are going to go to the issuing bank. Some are going to go to the card association, such as Visa. The payment processor, such as Visa, is going to get a slice of that, those revenues. And then if the merchant is using a payment gateway, which could possibly be Visa, and we'll talk about that a little later, those are additional fees. So here, 2.5% of the revenues have actually gone to fees, and this is really a concern for many merchants. Next slide. Visa makes money from fees, primarily service fees, data processing, and international transactions. And I highlighted in green the growth of these revenue segments. And you can see the international transaction has the highest growth. This is a major growth driver for Visa. It's very lucrative with almost 50% year-over-year growth. Next slide. Analysts are anticipating earnings per share growth of more than 20% next year, 2024, within the transaction and payment processing services sub-industry. The total addressable market for this sub-industry is about $45 trillion, and only about 20 trillion is currently carded. So there's a lot of room for growth at this point. Now, there are countries where cash are still king, and this is also potential growth opportunities for Visa to convert to digital payments. Next slide. Whenever I analyze companies, I always want to know where their future growth is coming from, and Visa really outlines this very nicely. So we're going to walk through their strategy, and part of their strategy is to accelerate their revenue growth and fortify their key foundations. Next slide. So Visa is remaining focused on moving the trillions of consumer spending in cash and checks to cards and digital accounts on their network. They have 3 core products: the credit, debit, and prepaid cards. They want to make these the utilizations of these cards as easy, as efficient, as safe and secure as possible. There are many consumers and merchants that prefer a contactless way to make transactions. So Visa's tap to pay services have grown quite a bit. Tokenization is another area that is growing quite rapidly. Tokenization is similar to Apple Pay. Imagine if you register with Apple Pay, Apple is going to take your card information and they're going to convert it to a string of randomly generated numbers called a token. This is very similar to encryption. So this is a segment that has grown quite rapidly for Visa. Visa now has more digital tokens in circulation than they do cards. And the actual tokens have almost doubled from last year, and about 4.8 billion tokens actually in circulation. Next slide. New flows is a way to capture new sources of money movement. So instead of focusing on the consumer to merchant, Visa has identified business to business, business to consumer ways of to generate additional growth opportunities. And you can see all the way to the right where I place a red star. Our B2B business has nearly $1.5 trillion in payment volumes this past year. So this is growing quite rapidly. Next slide. Their value-added services are a way for Visa to deepen their client relationships. And let me discuss a couple of these. The issuing solutions. Consider a bank, Truist Bank. Truist Bank distributes debit cards and credit cards. So what Visa would do, one of their solutions would be to provide fraud mitigation, dispute management, and data analytics services. The acceptance solution, similarly, it's a way for Visa to provide businesses with a way to accept digital payments from all over the world. And one of the ways that they do this is with a payment gateway, which we talked about earlier. Some of these gateways you might be familiar would be Square or Stripe or even PayPal. PayPal has a gateway service called Payway or something like that, Payway. But these are ways that Visa and other companies can provide services to businesses to ensure that they can accept digital payments. Visa actually has a service called CyberSource, and this is their payment gateway. Next slide. Visa is fortifying their key foundations, which include their network of networks. They want to be the single connection point for money movement. Their technology platforms, they want to strengthen, and which is part of their infrastructure. Securities is a significant area that they want to strengthen to help minimize risk. The Visa brand is the most recognized brand in the world, and they tend to protect that and tend to grow that as best as possible. And then they're focused and committed on their employee development programs. Next slide. Next slide. So some of the concerns, now the financial industry is very, very competitive. It's also cyclical. So the revenues are tied to the economy. This oligopolistic nature of the industry is also a little bit concerning. If you think about a monopoly is when you have a single company that will exert control over a market. And an oligopoly, similar to Visa and MasterCard, you have several companies that could potentially exert control within a given market. And the problem with this is that these companies can collude and control prices, and this can result in uncompetitive prices and stifle competition. And these swipe fees, so to speak, have been a target of regulators. If you are interested in investigating Visa, I would encourage you to become familiar with the Credit Card Competition Act of 2023. I won't go into that, but this is in circulation currently in Congress, and I believe it's going to the Senate. So there are deep concerns regarding these excess fees that these credit card companies are provided. Another concern is that governments could favor local networks and could shut these out of emerging market opportunities. And an example here is UnionPay. UnionPay is actually the Chinese state-owned financial services corporation, and they provide payment processing services. And this is rapidly growing also. Next slide.
5 minutes, Jonathan, 5 minutes.
Okay, all right, thank you. Next slide. So this is a high quality company. This is what we look for. We look for steady increase in sales growth, steady increase in earnings growth, and you see the price bars are increasing accordingly. Next slide. The recent quarterly figures show improving growth, consistent growth. The top spreadsheet is sales growing at 11.7% quarter over quarter. The bottom spreadsheet shows earnings per share growing at 25%. Next slide. Management scorecard profit margins are fantastic, 63.7%. The bottom spreadsheet return on equity is growing, very, very stable, very consistent at 37.8%. This is excellent. Next slide. Debt is one of the lowest in the industries and amongst the peer group at 35.9%. And you can see the recent quarterly figures. It's actually decreased 14%. That's fantastic. Next slide. So I've highlighted in the green box in my spreadsheet at the top the average 5-year historical sales and earnings growth rate at 8.2 and 16.1%. I've tabulated all of the analysts' forecasts, and I'm getting an average of 10.6 for sales and 14.5% for earnings. And I'm using 10% for my sales and earnings growth rate. Next slide.
2 minutes, Jonathan, 2 minutes.
Okay, thanks. I selected at the very bottom the forecast high price. I'm using a high PE forecast of 30, and this calculates to a high price of $387.70, which is relatively consistent with the price range that the analysts are projecting over the next 5 years. Next slide. I'm using a low PE forecast of 25, and this calculates with a low price of $197. Next slide. So if we were to purchase this company at the current price as of last Friday, $239, we would expect, or hopefully would expect, a return of almost 11%. Next slide. So Visa is a high quality company. It's large, but it's growing like a medium-sized and small-sized company with those fantastic sales and earnings growth rate. It's very well managed, and I think at the least this should be a consideration for your watch list. It's currently in a buy zone, but it's just a fantastic company. I think this is a company that everyone should really consider owning. Thank you.
Thank you, Jonathan. Nice presentation. So now we're going to switch over and we're going to start to look at two stocks using SSG Plus. That's a more advanced feature that we have. And we have two of them here. Janet is going to be able to talk about Skyworks Solution, and then Lee's going to talk about Perion Network. So let's go forward, and Janet, tell us all about Skyworks.
Okay. Skyworks is in BI in a number of places. Next slide, please. If you go and look, you're going to find it as the undervalued feature. And there's quite a nice article about this, by the way. It's a business of wirelessly connecting electronic devices across the board. But the softening demand for smartphones created inventory surpluses. So when managers' guidance fell below analysts' expectations, stock prices fell. However, the future drivers of the growth do look positive. 5G-based smartphones, rapidly increasing market penetration of smartphones, in emerging markets, growing global wireless data traffic. Internet connectivity for vehicles is going to be a major source for growth by 2030. Skyworks has a well-diversified product portfolio, and the growing need for faster communications and connections, low latency and efficient battery life in your wirelessly connected devices has been driving the demand for Wi-Fi enabled hotspots. Next slide. I really encourage you to read this. My presentation is really based mainly on this article. As I said, it's been quite popular among Better Investing members for quite a while. It was featured as the undervalued company in January 2016, as well as now, and the stock to study for May 2019 and June 2014. It's ranked number 44 in the top 200, and you would have seen that in the April 2023 issue. About 169 clubs hold shares in this company. They came into being through a 2002 merger of Alpha Industries, a supplier of technology components to the United States military, and the wireless operations of Connexent Systems in a deal that was valued at about $3 billion. And the newly formed Skyworks actually used to be in Boston, where the Alpha Industries had been based, but now it's in California. Next slide. Their chief products are radio frequency chips and all the related components, mainly for smartphones, but it also supplies and is growing components for wireless technology and automotive, defense, healthcare industries. Next slide. They have about 6,000 customers, and China was a major market. Apple, major customer. Their manufacturing facilities are in Japan, Mexico, Singapore, California, Maryland, Massachusetts, and then they have design centers in Texas and California. But their sales are mostly through distributors. Only about 18.2% directly are sold to corporate customers, such as Cisco or Orange or Verizon, Samsung, Google, Alphabet. Next slide. Included in their goals, Skyworks expects great demand for chips in the automotive, cloud computing, and telecommunications, especially much faster Wi-Fi, as you can well imagine. Their wireless networks components are needed for tablets, wearables, home systems, broadband, cellular infrastructure, energy management, industrial controls, and of course your GPS. And Skyworks will focus on decreasing inventory that built up from the COVID supply chain, a concern that affected the entire semiconductor industry. They also plan to repurchase shares. Next slide. In 2021, Skyworks acquired a company called Silicon Labs, an infrastructure and automotive business, and boosted their presence in electric vehicles, industrial and motor control, power supply, data centers, 5G wireless infrastructure, and smart home systems. And that gave them less reliance on Apple, although Apple is still a major customer. Next slide. I listened to their investor press release today, and the information that I got, the revenue did decline. The quarterly dividend was down, but they're going to, their earnings were down. They're raising their dividend. Their adjusted earnings were late Monday as $1.73, and it was down from $2.44 a year before. This is nothing new to them. They knew this was going to happen. They're expecting 2 more quarters, and then they're going to be home free and really doing well. The analyst had polled by Capital IQ. They expected $1.67, so they did better than that. The company said it expects fiscal quarter 4 earnings per share of $2.10. So I think that will be quite good. They've increased their quarterly dividend to 68 cents a share, and it's payable on September the 19th, in case you happen to hold this company. Their shares were down, unfortunately, about 2% after hours activity, because they closed today at like $110.17. But that always happens when the earnings are lower than people want them to be. Next slide, please. Okay, let's do a quick analysis of Skyworks. By the way, I got these questions many years ago from the Better Investing magazine. Let's look at their sales. They were increasing every year until 2019 and 2020. Then they jumped up in 2021 and 22, but are expected lower, of course, this year. Also, they haven't doubled in 5 years, and we'd like for that to happen. But the earnings per share have increased steadily since 2012, again until 2019 and 2020, and this year. By 2022, the 2016 earnings had doubled. As a medium-sized company, we should expect 7 to 12% growth annually. Historically, though, it's reached 16% from 2013 through 2022. Dividends have continued to rise each year since 2014. The highest yield happened to be 2.7% last year. Management expects to use some of the free cash flow to support the dividend, and also, by the way, to repurchase stock. They have excellent free cash flow. Current assets are more than twice their current liabilities. I always look for that. The payables and debts are low. In fact, debt is lower than its peer group, and the peers that the BI magazine brought up were Broadcom, Qorvo, and Qualcomm. The receivables are lower than the last 2 years. The inventory is higher, but cash and receivables do exceed the current liabilities. The operating margin is higher than 15%, and it's stable. The return on equity is above 15% and was increasing since 2020, and still expected to be well above 16%. Your pre-tax profit is higher than the peers, Broadcom, Qorvo, and Qualcomm, and the peer group, as well as the industry. The current PE is between the average low and the average high over the past 5 years, and below the signature or average PE. Next slide, please.
5 minutes, Janet, 5 minutes.
This is what the bulls and bears said back in 2022 in November. The bulls see more demand for advanced wireless technology. That's no surprise. Smartphones are moving into more areas globally, and new industrial uses. Next slide. The bears have expressed a concern that the customer base has been rather narrow, China and Apple, and the prices will fall and competition will increase. Next slide. Now, considering the economy, the supply issues, the inventory global challenges, economic challenges, the lowered U.S. credit rating, and the resulting selling of tech stocks, because some of the investors are moving to value stocks, I decided to do a very, very ESG using Value Line's low projections rather than the analyst consensus. By the way, that's in the magazine article, that wonderful consensus. Or even Better Investing's member sentiment. I chose the sales growth of 1.5%. Now, why? Because it's due to the decline in demand for mobile products right now for smartphone customers in the Asia Pacific region. The company has lowered the selling prices and the unit volumes, even though that's been partially offset by a favorable product mix. Member sentiment, by the way, was 7%. I like a surprise on the positive side. Then I set earnings growth at only 4%, since expenses for research and development, for selling, for your administrative costs, they've declined due to a drop in headcount related outlays, including share-based compensation. And I mentioned that they have announced a share repurchasing plan. It's for $2 billion. The member sentiment was estimated at 10%. 26 of the analysts estimated 15% long-term, but I wanted to go worst case scenario. The analysts did predict negative for 2023, which even the company has been saying that's the way it's going to be. Next slide, please. I decided to make.
You've got 1 minute left.
I decided to make 2020 PE outliers and then to use 20 as my high PE going forward and 12 as my low PE between the trailing 12 months and 4-year averages. Next slide. So then I got a price of $215.50. I decided to use the 52-week low as my lowest price. Next slide. The Morningstar had a fair value of 155, well above the current price. Next slide. So I think of it as a medium-sized growing company, pretty quickly growing. It's a well-managed company facing industry-wide challenges right now. It's fairly priced, trading near its 5-year average PE. It's a buy up to 111. It's very close to that right now for a 15% total return and 3-to-1 upside downside ratio. It is definitely a worthy candidate to add to a watch list or to purchase when the price is right. Remember to do your own study. And this concludes my presentation.
Thank you, Jen. Wonderful job. And last but certainly not least, our cleanup hitter, Lee, tell us all about Perion Network. Lee, make sure to unmute yourself. We can't hear you.
Sorry, folks. Let's try this again. Okay, so I will be briefing, as was stated, the stock first came to my attention during Doug Gerlach's presentation at the DC Regional Chapter meeting in June. It's also featured on the Better Investing ticker heat map. Next slide. Next slide. Can you hear me? Okay. So Perion Network is a global multi-channel technology innovator in the digital advertising ecosystem, providing brands and publishers with an opportunity to unlock lucrative growth opportunities. The company operates across 3 main pillars of digital advertising: ad search, social media, and display video, CTV, which stands for connected TV, basically connected to the internet. It was founded in Israel in 1999, where it's headquartered. It has a new CEO, Tal Jacobson. He took over on the 1st of August. The former CEO moved to the board of directors after 6 years as CEO, and I'll talk a little bit more about Tal on a later slide. Next slide. So about the company, the March 2023 issue of Small Cap former, provided a good summation of the evolution of advertising platforms that's brought media producers and advertisers turning towards video advertising as a way to pay bills. Simply put, more Americans are subscribed to one streaming platform than to a traditional television service. Think Netflix, Disney Plus, Peacock,
Muted.
Amazon Prime, and not just television, connected TV. You could also think about mobile phones, tablets, PCs, gaming consoles, etc. Perion is highlighted in this article as an emerging leader in the digital advertising space, and the article also notes that since 2018, when the company reached consistent profitability, Perion has seen sales grow at 27.9% on average a year, and earnings per share expanding even faster at 56.8% on average annually. Next slide. So several CFR industry surveys address markets germane to Perion's business model. The bold text on the left speaks to digital transformation, AI and generative AI and its capability growth, and it mentions Microsoft's place in this growth. Highlight Microsoft because of Perion's partnership with Microsoft Advertising since 2010. In November 2020, the partnership was extended for 4 additional years. And one of the numbers accompanying the software survey states the generative AI software market is expected to expand tenfold by 2028. The circles on the right show information, numbers specific to the interactive media and service industry, specifically talking about digital advertising. And I'll just highlight one, and let me move this so I can see it. And that is that 50% of the digital advertising space is occupied by Alphabet and Meta platforms. So they're really dominating this sector. Next slide. So pictured here is the new CEO of Perion. He became CEO on the 1st of August. He's been transitioning since February. When the changeover was announced, his predecessors moved to the BOD, as I mentioned. So continuity in operations is assured. Before taking over, he was a GM of a Perion subsidiary that was in charge of their search advertising, and he brought that fledgling business into health. And it's been a significant driver of Perion's soaring market share and evolution. And he also cemented the strategic relationship with Microsoft. In 2021, his subsidiary won Microsoft's Advertising Global Supply Partner of the Year award. So you see the numbers there, and the top figures show a very respectable year-over-year growth. The bottom 2 figures just represents the revenue and margin contributions, less what they call traffic acquisition costs, which are basically the major expense for producing Perion's products. Next slide.
5 minutes, Lee, 5 minutes.
Okay, so this slide provides a very positive Q2 year-over-year progression of adjusted EBD and revenues since 2021. Next slide. And what you see here is the diversification of Perion between their display advertising and their search advertising. Both are doing well since 2021. Next slide. And here you see that Perion raised their revenue guidance based on their performance the first 2 quarters. And they've done this both quarters, both with the revenue and adjusted EBITDA started with growth year-over-year targets of 14%. So you can see how they pushed that out. Next slide. Okay, so here you see how Perion has been outperforming the global and the US markets and the categories shown. The first line shows their growth percentages for the first quarter, second line, second quarter. Slide. Next slide. And here is a display basically of how Perion operates. Their main vehicle for integrating their analysis is what they call their intelligence hub. It takes data from 3 different sources, churns this and recommends a number of dynamic solutions, and then using their AI and sort mechanism and sorts a targeting engine that is cookieless. It pushes the advertising to the platforms you see at the right. You see connected TV, online video, high impact display. A DOOH is digital out-of-home advertising. Think of marquees, billboards, kiosks, and so on. Next slide. And this shows an award that Perion won along with, Albertson. And basically the award is for their retail media solutions. And we can go on to the next slide. Okay, so here's kind of a snapshot
2 minutes.
of what the analysts think of Perion. Morningstar gives it a 4-star rating, says it's discounted 15%. Zacks has it as a buy, manifest investing, projected annual return of 17.5%. CFR has it as a strong buy. Next slide. So here we have the analyst growth projections. There's kind of all over the map, mostly short term. So I relied on small cap investor and manifest investing and average their forecast and use those to determine my growth and sales projections. Next slide. And you'll see those on this slide, 15% for revenues, sales, and 13.2% for earnings per share. Valuation management metrics are very strong for Perion. Next slide. And here's historical sales along with the peers. One thing I noticed here, if you look at the industry revenues and compare it to the peers, and notice the logarithmic scale on the left, you'll see how dominant the major players are in this industry. We're talking about, as I mentioned, Meta, Alphabet, also Amazon. Next slide. Here's the peer management comparison. Perion shows up very well here. You might think the trade deck is a little bit better, but if you look at the trend of their pre-tax profits and return on equity, you'll see that Perion is really moving in the right direction, and their debt to capital is commendable. Next slide. Here's the price earnings history, average of 19.3 high, 8.5 low PE for average PE of 16.4, current PE 15.8. Next slide.
1 minute, Lee, 1 minute.
Gotcha. So I use this curve to help me determine what I wanted to use for low price. The 24.6 is the low price for this calendar year. Next slide. Here you see the evaluations. Average PE, I actually used 18.4 since I took out the year 20, which I thought was an outlier. I used 25 as a low price, and this shows Perion as a buy with a 4.1 to 3 upside downside ratio. Next slide. And here's the 5-year potential compound annual return, 16.7%. Using high PE, 9.4%, using average PE, and Perion does not provide a dividend. Next slide. And here we see the upside downside ratio. Again, the upside downside number is 4.1 to 1. Next slide. So here are my conclusions. Perion is a small size, I considered explosive growth stock, well managed. Its current PE indicates it may be slightly underpriced as it's below its 5-year average PE. I have it currently as a buy up to $37.70, and I think it's a worthy watch list candidate. I might mention that the stock closed at 35.89 today, which brings the upside downside ratio to 3.7 to 1. Actually bounced almost 4%. And that concludes.
Unmuted.
Okay. Thank you very much, Lee. I appreciate it. So we went through these kind of quickly. I know some of you like to have a little bit more discussion, but we can do that here with questions, as well as you can also, if you watch this on YouTube later, you can post questions there and we can discuss it there. So we're going to go over and sort of ask all of our presenters where this sort of fits on sort of this life cycle that's is sort of a T. Rowe Price way of sort of looking at things. So let's go to our next slide, and we'll ask all of them. We'll start with Kent. Why did you pick that location? Let's back up a bit. Let's go back to 117. There we go. Thank you. Tell us, Kent, why you picked that location for booking.
Well, actually, I think that booking, having been around since 1997, and has been acquiring companies at a pretty good pace, I think is essentially not really growing by expanding its own markets. It's just grabbing other people's markets, and that I consider a mature growth strategy. And the other thing is it really is kind of slowing down over time, and so that's why I put it that high up in the mature growth category.
Okay, thank you. Jonathan, tell us why you have that location for Visa, right smack dab in the middle.
Yeah, I felt that Visa still had a lot of room to grow, particularly when I discussed the total addressable market. There's still a lot of runway left. And also, when you consider many countries and many consumers are still using cash, so there's potential growth opportunities for Visa to convert those cash payments to digital payments too. And then finally, Visa, as a large company, it's growing like a small to medium-sized company, and that's just fantastic how they're growing. Sales are growing, earnings are almost growing twice as fast as sales, and it's just absolutely phenomenal. And management, when I talk about management scorecard, management is just doing an absolutely fantastic job with the profit margins and return on equity and debt. So this company really is firing on all cylinders, and it's just been a fantastic company. I think there's still a lot more room for it to grow also.
Okay, thank you. And Janet, tell us why you have that location for Skyworks.
Well, it's a fairly young growing company still with great prospects due to the increasing demand for faster wireless connectivity globally. They're positioning themselves to meet that demand. They are really hot into 5G, even Wi-Fi 7. They've already secured their place with the Android smartphone people like Google and Samsung and Vivo and Oppo and Xiaomi or whatever that word is, and they've got power. They've powered Bell's Wi-Fi 6E, but 5G is just opening up tremendous roads for them in their small cell deployments with top American operators. They are really primed to move forward in 2024.
Okay. And Lee, tell us why that's your location for Perion Network.
So I think even though the company's been around since 1999, it's just hitting its stride, and it really didn't get going until it kind of pulled out of its doldrums in 2017 when they brought on their the previous CEO. I think it's going to be able to particularly continue to leverage its partnership with Microsoft and take advantage of Microsoft and Bing's diving into Chat GPT. So I think it's going to continue on a very upward trend for a while.
Very good. Thank you. All right, let's go to the next slide. And you've heard us talk for a while. Now it's a chance for you to vote. And Cheryl, if you can release that. And also, this is a good time if you have any questions for any of our presenters, you can put that in the question box, or you can raise your hand. And once we're done with the voting, we'll ask people to sort of give you, we can direct your questions to whoever the presenter is. So let's see how we're doing. Again, there's no cost to be able to do this. We got about 50% of you voting. Now we're up to 60%. Let's see if we can get up there, up into the 70s or 80s. If we get a few more, looks like we got a pretty close race going on here. Okay, we're up to 70%. 74. Can we get up over 80? I'm hoping we can get up over 80. Just one or two more votes. We have about 50 of you in the audience here. One more? No. Two.
Not
three.
taking my vote.
Yeah, it won't, because you're on the other side here. When you're on this side, you don't get the chance to vote, Janet. Sorry. All right, it looks like we're just about there. Why don't we just sort of close it off at this point? And go ahead and share that. And there you are. It's kind of hard to beat Visa. We had some good candidates. I thought Perion and Skyworks could give it a good run, but people like a good, reliable Visa. So with that, let's see what kind of, do we have any questions? Oh yeah, okay. So we have one here from Al. This is for you, Kent, on booking. Two questions on booking. It went up to $179 per share today. Do you think the market is acting irrationally, given that booking's long-term debt has grown from $12 billion in 2022 to $13 billion in 2023, and its net income still hasn't reached its 2019 peak of $4.80 or 4.8, there's probably millions or something like that. Are there major concerns from Google and Meta's trip services that are being introduced?
So let me answer the second question first. There have been several analysts, and I am also one of those folks that is concerned about. I would be concerned about Google and Meta's entry into the trip service arena. I am not sure that they have the wherewithal to pull it off, given that they really haven't been in that area for a long time. And I am not sure where they're going to get their data and how they're going to set up their interactions with vendors. Like Booking has been in the arena since 1997, so they've been there for a long time. So as far as Google and Meta, there's some concern, but I am thinking I would be more surprised if Google and Meta are successful on their own than if they just go ahead and say buy an online travel company, say Booking.com. So that's my answer to that question. The answer to the first question is as I pointed out, I'm a little concerned about how high their debt is, and I am not convinced that the rise in price in today's market is warranted, given the growth rate of their earnings. And the growth rate of the earnings, even though in the last quarter it might have gone up 140% compared to last year's, that is still well below, as Al pointed out, well below their earnings in their net income in 2019. So yeah, I'm a little concerned about that, and I would spend some more time trying to understand what investors are looking at. I might be more inclined to think that if there is a spike in interest rates, that their price may go down, or if there's any kind of impact on their income, their price might go down. So that's my answer.
We did have a question here on someone who wanted to be able to show the poll results again. Cheryl, can you put that back up? Can we share our results? There we go. Phil was asking for that. So there you can see the numbers. Clearly overwhelmingly support for Visa. I thought, again, Perion and Skyworks could give them a good run. Phil, do you have any other questions other than that? And raise your hand. We'll open things up if people want to raise your hand to the icon on that. It's a hand. Just click on it. We'll chat with you. I know we got some regular talkers in here, and everyone seems to be kind of quiet today. You guys have been quiet for a couple months now. Anything else? I guess not. We'll ask once more, but let's finish up with our final slides. And Cheryl mentioned this earlier, that if you want to be able to reach us for anything, there's the Maryland and DC chapter ones. If you have anything specifically with this webinar, there's a Gmail account for digging into BI to be able to find us. And there's a picture of us from BINC last year in Dallas. In fact, a lot of us are still on this presentation here tonight. All right, let's go to our next slide. And if you want to be on this mailing list, and I know a lot of you are because we're regulars, you don't have to be in the DC regional chapter, but join our mailing list here. Carol does a wonderful job of getting notices out for this. We don't bombard you, but just enough to be able to give you information on this and on our book club and other events that we're running. So do that. Let's go to our next slide. And Kent, why don't you tell us all about volunteering?
All righty. So as Kevin mentioned early in this presentation, like a week or so ago, the Maryland and DC regional chapters are run entirely by volunteers. That means we don't get paid to do the work that we do, except for the fact that we learn a whole lot. We can improve our investing skills, and we get really good feelings by helping other folks learn how to earn and invest and retire with some money in their pockets. And the other benefit is that you do get a good set of benefits. In other words, you get free access to the online data feed, as well as free access to the Better Investing tool set. So becoming a chapter volunteer can be really helpful in working with other people in your organization, your investment club, as well as with yourself. So that's all I got to say.
Okay, thank you. Let's go to our next slide. And so here's what we're going to be doing next month. The stock to study is Crown Castle. I believe that's a REIT. And then we're going to have Kinder Morgan, which is a oil and gas pipeline distributor, which is the undervalued feature. And we have two to be determined that we haven't gotten anything yet from our future presenters, which doing it. Normally we're the first Monday of the month, but that's Labor Day. So we're going the second Monday of the month, September 11th, and the like. So let's go to our next slide. And again, I have things up on Manifest Dashboard. Here are all the different ones that are there. And if you download these handouts, and if we go to the next slide, you can be able to see them. You don't need a subscription to Manifest to see them. I've known, I think, Janet, you said you were having trouble with it, but they should work if you have this handout. You just click on those links, and then we'll take you directly to those locations to find them, and you can sort of track how we've been doing it. So let's go to our next slide. And that is, we are going to have this up on YouTube whenever I can put it up. It's either going to be tonight or tomorrow. There's again the hyperlink to it. Please share that with other people. Please make sure to like and subscribe. That will help with the algorithm so people can find us. I see we do have people from outside this area. Thank you very much. It's also a great way for us to be able to find people that aren't in our community that probably should. One last check. Jonathan or Kent, do you see any other questions, or are we pretty much done there?
I don't see any additional questions.
Okay. Well, then I think with that, we will say good night. Thank you for being here. We'll see you next month when we dig into the BI for September. Good night, all.
Good night.